Assalamu alaikum friends, welcome to section A of Audit and Assurance. So the paper which I've selected to do on CBE is the practice test 1, section A. Okay, this will be part 1 where I'll be discussing section A, and then I'll be having a separate video on section B. Okay, so this paper is different to all the other papers in the applied skills level, that is your F5 to F9. The difference is if you see your F5, F6, F7 and F9, you have three sections: section A, section B, section C. But in audit and assurance there are only two sections, section A and section B. Okay, and this is a bit different, the section B, because section A is like other sections, but section B, it's like section A is like section B of the other four papers, and section B will be like section C of the other papers. That means in section B you have to write. Okay, so even in section A, the questions you have, the options you have to answer, there will be a case study for that. Okay, based on that case study you'll be asked, and then in section B you have to write. Okay, so there are many questions in section B in audit and assurance. Okay, and mind you that one of the hardest paper, I'm not saying that definitely people will not pass it in first attempt, they do, but according to the pass rates and all, the hardest paper in F level is this paper, audit and assurance. Okay, so but it does not mean that a student cannot pass it at first attempt because others has been failing. So don't compare yourself with someone else. Okay, that's the only advice I would like to say for audit and assurance. So let us start with section A. Okay, so if you see on your left hand side, you are given a case study. Okay, because other papers, if you've seen F5 to F9, the other papers, they don't have, they have this in section B, but this in audit and insurance, this is tested in section A. Okay, so let us first read what the requirement is about. The audit manager has asked you to review the full list of trade payables and select balances on which supplier statement reconciliations will be performed. Indicate, okay, identify by clicking on the relevant box in the table below if the following items should be included or excluded from your sample. So first let us read this case study because the same case study will be there. Okay, 5 questions will be asked for each, on each case study. That means there are total 3 case studies, 3 scenarios. Okay, on each scenario there are 5 questions, so total 15 questions will be there in your section A. So you are an audit senior of Viola and Company and you are currently conducting the audit of Poppy Company for the year ended 30th June 2006. Materiality has been set at 50,000. You can highlight. And you are carrying out the detailed substantive test on the year end payable balance. So the thing is, this is a payable balance, okay? And it is a detailed substantive test. The audit on, by the way, what is this detailed substantive test and all? Definitely a student who is watching this video for the first time who does not have any knowledge of audit and assurance, who didn't previously go, especially who is after their 12th or A level, are thinking about ACCA and going through audit and assurance, they might not know what is this detailed substantive testing. Okay, so detailed substantive testing is something, there are more terms like this in audit. You have such terms which we'll be learning in audit and assurance. Okay, definitely it's not, these words are not tough, and audit itself is not a hard, it's not a tough subject to understand. Okay, the only thing which makes an audit tough paper compared to other is you have to use a lot of your own judgments. You have to use, it's like more subjective kind of thing, not objective. Okay, professional judgment is required a lot, where you have to decide. Okay, so that's what, it's not like some calculations that you have a right answer and wrong answer. No, not like that, or some methods to follow, some formulas to follow, and you will get it. Okay, so let us start. The audit manager has emphasized that understatement of the trade payable balance is a significant audit risk. Okay, below is an extract from the list of supplier statements held by the company and corresponding payable ledger balance of the same date along with the sum commentary on the noted differences. Okay, If you see, it is different, right? The payable ledger balance and the statement balance. So you'll see some notes below. Carnation and Company, the difference in the balance is due to an invoice which is under dispute due to faulty goods which were returned. And for Lily, the difference in the balance is due to a supplier statement showing an invoice dated for 70,000 which was not recorded in the financial statements until after the year end. The payable clerk has advised the audit team that the invoice was not received until this date. Date is very important again. Okay, so now you have read it. Now you have to say whether to include or exclude. So the first one, supplies with material balances at the year end. Material balances. We know when something is very material nature, you have to include it. It's compulsory that you have to include it. Okay, so suppliers with a material balance at the year end, yes, you include it. Next, suppliers which have a high volume of business with Poppy Company. High volume, so you have to include. Okay. Next, major suppliers with nil balance at the year end. Major supplier, you have to include. And major supplier when the statement agrees, where the statement agrees to the ledger. This you can exclude. Okay. Why is it like this? You should know why you're including and why you're excluding. Okay. Here, what is the main key assertion? Completeness. It has to be complete. Completeness is the key assertion. Okay. Here they are saying in the sample what you have to include. Okay. So the sample should be selected to verify where the balance may be understated and therefore they should include. Okay. If it's understated, definitely high volume, material balance and all those things should be included. Next, you see, when you haven't scrolled down, you have to say everything possible on the page. If you're not, you cannot go to the next question. This saves you from missing out on anything. Okay. Still, I haven't viewed. Next, question number 2. Same case study. Okay, definitely I don't have to read it again. Which of the following audit procedures should be performed in relation to the balance with the Lily? Okay, it is with Lily to determine if the payable balance is understated. Okay, now there are so many audit procedures and you have to know those audit procedures. You will be going through it when you are going through audit and assurance, the audit procedure. Some of this. Okay, for this, what should you do? Okay, so we'll go one by one. Inspect the goods received note to determine when goods are received. Second, inspect the purchase order to confirm it is dated before the year end. Third, review the post year end check cash book for evidence of payment of invoice. Send a confirmation request to Lily to confirm the outstanding balance. So out of this, which one it will be? First of all, you should understand what you're supposed to do here. You're supposed to determine if the goods should be included in the payables at the year end by inspecting the goods received note. Okay, so it is the first one. You have to inspect whether because this is about, if you see for Lily and go down and say it is something. Okay, why is the difference due to supplier showing an invoice dated at this rate which was not recorded in the financial statements until the year end. Okay, so inspect the goods received note to determine when goods were received. Okay, next, which of the following audit procedures should be carried out to confirm the audit balance owing to this one? There are many audit procedures. Okay, you cannot apply the same audit procedure for everything. If you want to confirm something, or if you want to check on the accuracy, if you want to check the completeness, audit procedures are different, it changes. Okay, so confirm the balance owing to Carnation. What do? Okay, just go to Carnation and see what is it. The difference is balance is Y. Faulty goods which were returned. Okay, there's a dispute with an invoice due to faulty goods which were returned. Okay, so how are you going to confirm the balance owing to Carnation? Review the post year end credit notes for evidence of acceptance of return. Definitely one is there because you have returned some faulty goods, so you will be given a credit note to see the evidence for the acceptance of return. So one is there. Okay. Number two, inspect the pre-year end goods return notes in respect of the items sent back to the supplier. Do we need it? You have to see each statement. Okay, each statement has to match. Inspect the pre-year end goods return note in respect of the items sent back to the supplier. Yes, you need to do this too. And inspect the post-year end cash book for the evidence that amount has been settled. No, 3 is not needed here. You only want to confirm the balance owing. Okay, you don't want to know how much is settled or not. So it is 1 and 2 only. Okay, because when you want to confirm the balance, what does it mean? It means whether the liability exists or not at that year end. Okay, next, the audit manager has asked you to review the results of some statistical sampling testing. Okay, which resulted in 20% of the payable balance being tested. The testing results indicate that there is a 45,000 error in the sample, 20,000 which is due to invoice not being recorded in the correct period as a result of weak controls and of one-off error of 25,000 which was made by temporary clerk. What would be an appropriate cause of action on the basis of these results? Okay. So definitely in the textbook you will not be given what is the appropriate course of action, right? From your knowledge you will not be able to tell what is the appropriate course of action. Here you have to use your own judgment, your own thinking, and you have to come up. That's why this paper is a bit hard. Okay. So the error is immaterial and therefore no further work is required. Do you think so? Do you think it's immaterial? See, it is immaterial if you see. Okay. Although the error is immaterial, even though it's immaterial, the auditor must reach a conclusion on the sample selected, and in order to do so, the effect of the error must be considered in relation to the whole population. Okay. So the effect on the control error should be projected across the whole population. Third one, Poppy should be asked to adjust the payable figure by 45,000. A different sample should be selected as this result not reflected on the population. Okay. Next. To help audit efficiency, the company is considering introducing the use of CATs. What is it? CAAT, Computer Assisted Audit Techniques. For some audits, you have been asked to consider how CAAT could be used during the audit. Okay, this you will be taught what is it? Computer assisted. Basically, you're using computers and all to audit. Which of the following is an example of using test data for some trade payable testing? Okay. Is it selecting a sample of supply balance for testing using monetary unit sampling? Recalculating the aging of trade payables to identify balance which may be disputed, calculation of trade payables days to use in analytical procedure, or imputing dummy purchase invoices into the client system to see it processed correctly. Just this one. You are using the ID system. Okay, so you're using the ID system, the last one only. If you see this, you can do manually also, the other three. Because here they have told you are importing this into the dummy purchase invoice into the client system to see if it is processed correctly. Okay, so other options, if you see the three options, these are examples of audit software. Okay, next. So this is another second case study. Okay, so let us read the case study first. But before that, let us read the requirements so that you have an understanding when you go through the case study what you're looking for. Okay, Blanket and Company has a responsibility to perform procedures to obtain sufficient appropriate evidence that subsequent events are appropriately reflected in the financial statements. Okay, so this is about subsequent events. Indicate by clicking on the timeline up until which day the auditor should perform subsequent event procedure. Okay, there are rules for this, until when they should perform. So let us read the case study. You are an audit manager and are approaching the end of the audit, which is a large listed retailer. The draft financial statement shows a profit before tax and a revenue. You have been informed that finance director left. As a part of the subsequent event audit procedure, you reviewed post-year-end board meetings minutes and discovered that a legal case for the unfair dismissal. Something after the reporting date, okay? Legal case for unfair dismissal has been brought against for the finance director. During a discussion with HR director of Samsung, you established that the company received notice of the proposed legal claim on this date. It's very important. Okay, whenever you are given facts, just highlight it. They have received the notice of proposed legal claim on 10th July 2006. So the HR told you that the Samsung company's lawyer believed that the finance director's claim is likely to be successful, but estimate that 150,000 is the maximum amount of compensation which has to be paid. Okay. However, the management does not intend to make any adjustments or disclosure in the financial statements. So now, what is it? You have to click only one. Okay. By clicking on the timeline up until the date. Is it the date till the date the subsequent events review is performed? Nah. The date of approval of the financial statements? No. The date of the auditor's report? The date the financial statements are issued, the date of the auditor's report. Okay. Why the date of the auditor's report? Because according to ISA, that is International Standard of Auditing, okay, you'll be taught many ISA in audit and assurance, don't worry about it. Now, what is this ISA 560 and all? So as per ISA 560, which deals with this subsequent events and all, okay, the auditor has a responsibility to carry out the subsequent events between the date of the financial statements and the date of the auditor's report. That's their responsibility. Okay, next. If after the financial statements has been issued, the company becomes aware of a fact which have caused its report to be amended, the firm should consider several possible actions. Which two of the following are appropriate actions they should take? There are two things, okay? Remember, you have to select two things. If you are selecting one only, you will not get the marks. If you are selecting two, if one is correct and one is incorrect, you will still not get the full marks. Both has to be correct for you to get the 2 marks. Okay. So what is it? Discuss the matter with management where appropriate, those charged with governance. Yes, this is one of the action always told for them to do. Obtain a written representation from management. No. Consider whether firm should resign from the engagement. No. Inquire how management intends to address the matter in the financial statements where appropriate. First, always you have to discuss with the management first before taking any action. Okay. Resigning and all comes at the end. They are the last resort. Okay. But most appropriate means the see all this could be an action, okay? They could take, but the word says appropriate action. Which will be the most? You discuss the matter with management and you inquire how they intend to address this matter. These are more appropriate measure. Okay? Because these are the first steps which an auditor should do. They have to discuss with the manager according to ISA 560. Next. Which of the following audit procedures should be performed to form a conclusion as to whether financial statements requires amendment in relation to unfair dismissal claim? Okay. So you can see lots of questions are being asked on audit procedures itself alone. So you know how important audit procedures are. Okay. So let us read. Inspect the relevant correspondence with Samsung's lawyer. Yes, you would, right? You would check out with the lawyer. 2. Write to the finance director to confirm the claim and the level of damages. No. Why is that? Because see, when you're asking the finance director to confirm and claim the level of damages, he or she could give you wrong, right? Wrong information, or he could claim something which is not correct. Or he could conceal information from you, hide information which is not so authentic. 3. Review the post year and cash book for evidence of payments to the finance director. Yes. And request that management confirm their ways in a written representation. So it's 1, 3, and 4. And there is another reason why you will not ask the finance director, because if you see here, finance director left. Okay, so they have left. They are not in the no longer in office in the company. So it's not advisable to ask someone who has already left the company. Next, you are drafting the auditor's report. An audit engagement partner has reminded you that the report will need to reflect the requirement of ISA 700 and known. What is it? Communicating key audit matters in the independent auditor's report. According to this, which of the following should be included in the key audit matters paragraph in the auditor's report? This also will be there. Okay, it will be taught to you what are the things which will be there in the key audit matters. So when you are preparing yourself, know what is there. So let us go one by one. Matters which require significant audit attention. Yes. Matters which result in a modification to the audit report. All matters which are communicated to those charging governance. All matters which are considered to be material to the financial statements. It is this. Key audit matters means you want to draw the auditor's attention towards that. It's so significant that you want the auditors to see. Okay, that's why it is the first one. Okay. Next. Which of the following audit opinions will be issued if the unfair dismissal case is not adjusted for or disclosed with the financial statement? So what will be the audit opinion? Also you have to know in a condition what could be an audit opinion. But there are so many audit opinions: unmodified, qualified, okay, disclaimer of opinion, or adverse opinion. There are 4 types of opinion. Okay, so in this, where unfair dismissal is not adjusted, not even disclosed, what type of audit opinion you have to give? Okay, a qualified opinion as a financial statements are materially misstated. A qualified opinion as audit is unable to obtain sufficient appropriate evidence. A modified opinion with an emphasis of matter paragraph, and unmodified audit opinion. Before this, you have to do a working. You just cannot say based on your you guess an answer, or based on your own opinion you cannot give an answer. Working is required. You have to see whether financial statements are materially misstated or not. If it is materially misstated, you cannot give an unmodified opinion. You have to qualify your opinion. Okay. So what is that working which you have to do? If you see here, definitely numbers are given to you, right? These numbers are not just given for the show. You need to make use of this number. Some calculation is required. Just because it's audit does not mean it's full theory and you don't have to write anything. No calculation is required. Don't think. Small calculations are required like this. So if you see the maximum damage, what is the maximum damage? It is 150,000, because they estimated that this is the maximum compensation they have to pay, 150,000, right? And this is not material to the financial statements. Why? Why is it not material? Just find out the percentage. 150,000 divided by what is the profit before tax? If you see the profit before tax is 6.5 million, so divided by 6.5 million. Okay, 1 2 3 4 5, and if you take it in terms of percentage. 0.023 means 2.3%. Only 2.3%. Okay, the same now let us take it against the revenue. That's why these figures are given to you. Now do you understand? Everything has a reason. 150,123 divided by 66 million. So 66 six zeros. Okay, millions are 6 zeros. 1 2 3 4 4 5 6. So it is, if you see, even small, 0.02%, 0.2%, sorry, very small. So therefore it's not material, you see, not material. So no modification to the audit opinion is required. So which one will be there if no modification? Unmodified or no? Unmodified audit opinion. If there are some see, not all the mistakes or misstatements what you do does not have a material impact on the financial statements. If it does not have a material impact, you don't qualify. Okay, you can issue an unmodified audit opinion. Unmodified audit opinion does not mean that your financial statements are always very clean, there are no mistakes or errors. No, it is, but it's not so material that you have to modify. That's what it means. Next, this is the third case study. Okay, so just let us go to the case study. So the in this company, he's the auditor, the FIR company. Scaramore and company's auditor of FIR company, a listed computer software company. Okay. The audit team comprises an engagement partner, a recently appointed audit manager, an audit senior, and a number of auditors. The audit engagement partner has also been appointed this year due to the rotation of the previous partner who has been involved in the audit for 7 years. Only the audit senior has experience of auditing a company in this specialized industry. The previous audit manager, who is a close friend of a new audit manager, left the firm before the completion of the prior year audit and is now the finance director of FAIR company. The board of FAIR has asked if the auditor company can take on some additional work and have asked if the following additional non-audit services can be provided. What are these? Payroll, recruitment, and tax. So payroll, routine maintenance of payroll record, recruitment, assisting with the selection of new financial controller, including the checking of reference, tax, services whereby the schemer and company would liaise with the tax authority on FAIR company's behalf. Okay, so the company has identified that the current year fees to be received from FAIR company for audit and other services will represent 16% of the firm's total fee income and total 15.5% in the prior year. The audit engagement partner has asked you to consider what can be done in relation to this self-interest thread. Okay, so this is more like about risk and some thread and safeguard. What are the safeguard and all these things and non-audit services? Okay, so complete the following sentences regarding the audit team. In relation to the composition of the current audit team, the fundamental principle of which one is at risk? Is it confidentiality? You see, you cannot just pick up from any box, okay? Like this, if you take from here, it will not take it. Why? You can only take, the moment they say fundamental principle, it means either confidentiality or either professional competence, okay? Below the black box, you'll be given the two white box. That means from there, you can select for this. So is it confidentiality or is it professional competence? Which one is at risk? It is the professional competence which is at risk. Okay, you can even put, if you want to change your answer, you can put confidentiality. You see? But the correct answer is professional competence. This is the right answer. Why is the professional competence? Why not confidential? What is confidentiality? We all know the meaning of confidentiality looking at the word. But why professional competence is at risk? Because if you see their engagement, their way they have composed, many of the audit team are new, if you see, and they don't have the relevant experience in relation to the specialized industry. Okay, because here they have told audit, they have, okay, only the senior auditor has experience. The rest, they don't have an experience in that. So because of that, it will have an impact on your professional company. You're not competent enough. That's what it means. Professionally, the new auditors and the one who does not have the experience are not competent enough. That's why professional competence is at risk, because only the seniors are have the experience. So next, an appropriate safeguard to deal with this risk. You should know what are the safeguards. So there are 4 safeguards. Out of this 4, you have to select one. Is it reinstate the previous partner, resign from the engagement, appoint a completely new audit team, or provide industry training for new members? Which one of them is the safeguard? Okay, so let us go through one by one. If it's not the right answer, why it's not the right answer? This way you will learn also the knowledge. Okay, so let us start with the reinstating the previous partner. Do you think this is appropriate? It is not appropriate. It is not appropriate. Why? Because according to ACCS Code of Ethics and Conduct, the previous partner has been rotated after 7 years to prevent a familiarity thread. Okay, so you cannot reinstate the previous partner. Okay, to prevent a familiarity thread, they have been rotated after 7 years. So definitely this is not the option. Next one, appoint a completely new audit team. Is it appropriate? This is not appropriate. Why? Because it's not likely to resolve the issue. It's not going to solve this issue. Okay, and also the firm are not likely to resign also. It's not like very likely that they will resign. And always it's the better, it's always taken as the last option, last resort if everything else is not possible. So the best is provide industry training for team members. Provide industry training. Okay, so that they have the necessary knowledge, they build up their competence and skills to perform their task at the best level. Okay, next, which of the following identifies a thread which could arise as a result of the finance director's previous employment at Skymore and recommends an appropriate safeguard? So you have to give a thread also and a safeguard also. What is it? Is it a self-review thread? Review the work performed by a previous audit manager. Familiarity thread, a different audit manager should be appointed. Because it's a familiarity thread means different audit manager should be appointed. Self-review thread, change the existing audit plan. Or familiarity thread, the firm should resign from the engagement. Is the second one. Okay, resignation is always not chosen. If you see, it is because it is not more appropriate, it is the least. Okay, at the end. Next, ignoring the potential effect on the total fee level, match the non-audit service to the thread to independence which would be created if the Skyamore and company were to provide the proposed services. Okay, so you have to match this with this. That means you have to take the white box and place it on the gray box. Okay, so the non-audit services, the 3 types of non-audit services are tax, payroll and recruitment. For them, what is the threat to independence? If it's recruitment, okay, what is it? If it is tax, what is it? If it is payroll, what is it? So if it's recruitment, it is self-interest. Self-interest. How self-interest? Because when you're recruiting, self-interest as the auditor would be involved in select. Your self-interest is there as an auditor when you are selecting an officer for the company. When you're recruiting someone, okay, who has a significant influence over the financial statement. So you as an auditor, when you go and recruit or select someone, you will first see your self-interest. So that's self-interest. Next is tax. Tax is what? Tax is like an advocacy. You are like an advocate. Why? Because you want to present the company in the best picture as possible. You want to show that the company is complying with the tax rules and all. Next is payroll. So definitely, payroll, the ones which is left, which is self-review. Self-review. You can review yourself. Because you are auditing the figure in relation to wages and salaries. So it's like you are doing the self-review. Because you are the one who is first setting up the payroll and then you are only auditing it. Next. Which of the following safeguards would not be relevant in mitigating the threat identified in relation to fees? Okay. Disclosure of those charged with governance that fees from fee represent more than 15 of the SkyMo's total fee income. So if you disclose, it's like you are mitigating, right? The question asked not mitigating. So this one is a mitigating factor. So that's not an answer. Second, a pre-issue review to be conducted by an external accountant. That is also mitigating factor. Third, use of separate teams to provide the audit and non-audit services. Okay. And a post-issuance review to be conducted by an external auditor or regulatory body. So this is not going to mitigate in relation to fees. It is the use of separate teams to provide the audit and non-audit services. Why? Because even if you use separate teams, the self-interest which you have, it will not address the self-interest thread. Okay. Self-interest thread will still be there, whether you separate or whether one person does it for the fee. During the course of the audit, a suspicious cash transfer has been identified. The audit team has reported this to the relevant firm representative as a potential money laundering transaction. Which of the following statement is true regarding the confidentiality of this information? Okay. Details of the transaction can only be disclosed with the permission of this. This is money laundering. Remember, in money laundering case, there are a different section for that. Okay, dealing just with money laundering. So it's not this. If there's a legal requirement to report money laundering, this overrides the principle of confidentiality. Yes. Yes. The company is not permitted to disclose, the auditor company is not permitted to disclose details of the suspicious transaction as the information has been obtained during the course of the audit. No, this is related to money laundering. So there you cannot follow the rule of confidentiality. The legal requirement of money laundering will override that rule of confidentiality. Okay. So third one is also not the option. In order to maintain confidentiality, the auditor company should report their concerns anonymously. No. What is this? Should know this. Okay. Because there is a section under SEC Code of Ethics and Conduct which says confidentiality information may be disclosed when such disclosure is required by law. When the law requires that confidential information, you have to disclose that confidential information. That time you cannot say this is confidential information with my clients, or I cannot disclose. No, you have to disclose it if the law requires, especially in the money laundering cases. Yes, because it's a fraud. You cannot conceal the fraud. As an auditor, you have that duty overrides the duty of the rule of confidentiality. Okay, so that's it for section A. This is how your section A will look like, and these are the questions you can expect. Okay, do more papers on audit. This is just practice test 1. You can even do practice test 2 and also the past papers and all. Next, let us go to next. So next is section B. Okay, so in section B, try to collect the maximum marks because section is just 30 marks, 30% only. not even 50%. You will not be able to pass through just attending section A. Section B also you have to get at least even half. You get, I would say more than half, because definitely no one of you, or what I say, I don't want to discourage, but most of the time it's possible, right? You don't get full marks for section A. Let's say, what if you don't get the full marks for section A, 30 out of 30? Let's say you get 20. So the remaining 30 marks you have to collect from section B. So work for more, so that you might end up somewhere even less than that still, so that still you pass with 50%, okay, or more than 50%. So if you see, this is 70. Okay, each question could be 20 marks or for 30 marks. Okay, there are 3 constructed response questions. Okay, so this I will be doing in the part 2, 3. I don't know how many parts will be there, but section B questions I will be doing in a different video. It's not in this. So just have an overview of section B questions. Okay, so you'll be given a case study here, and then on that you'll be asked questions like this, and here you have to type your answer. Okay, if you see this question is for 6 marks, asking describe 2 methods of documenting the sales system, and for each explain 1 advantage and 1 disadvantage of using this method. Okay, so what I'm going to do is I'm going to teach you how to write answers, build up your answer. Okay, I've done this previously for other papers also, the financial reporting, tax, performance management, financial management. Now I'm going to do the same thing for the audit and assurance. Okay, because this is the hardest part, writing answers. I know section A you will be able to do it, but section B is your real challenge. Okay, so all the questions in section B is similar nature, like this only. Okay, so with this I end it here and hope to see you in the next video.